Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Cristiano Bellavides, who's the Assistant Professor of Entrepreneurship at Syracuse University, to discuss why crypto's here to stay, but recent events could be a warning for regulators. Cristiano, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me.
All right, and let's get an overall view of your thoughts on this, what the impact of FTX is to the crypto space.
So first, it's an ongoing situation. Every day I read news and there's new events coming up. But overall, I think there will be a number of things that will be impacted by the situation. The first one is that there will be a lot of distrust from investors. I would say that this is a sort of Lehman Brothers moment for the crypto industry, because one of the main exchanges is basically bankrupt. There is lots of billions of dollars on the table, and so there will be distrust from all the different investors. There will be also failures from companies. There is companies that don't really have business models, so cryptocurrencies that don't really have a use will probably go bankrupt in the next few days. I've just received a report from a research company saying that 40% of the crypto hedge funds have some sort of exposure to either FTX or FTT tokens. 40% is a big number. So either direct or indirect, there will be changes from investors, from companies. But ultimately, I think there will be an improvement in the industry with a sort of cleanup. So companies and investors that don't really know what they are doing, they will go out of the market, and only the best business models, the best companies, the most savvy investors will stay in the game. So in the short term, a lot of troubles. In the long term, I think there will be an improvement.
So do you think this was systemic to the crypto trading and exchange ecosystem, or was this really down to one actor who over-levered, did not understand what was on the balance sheet? Because FTX was that white knight, right, within the crypto space, wanting to work with regulators in the SEC. You had the smartest investors in the world putting their assets behind FTX. And it's almost hard to comprehend exactly what happened when everything appeared to be lined up correctly. So I guess really the question is this systemic, or was this really related to, I don't know, maybe someone's ego and not properly managing risk in the balance sheet?
Well, I think it is systemic to a certain extent, in the sense, as I said, if 40% of the hedge funds has an exposure, this means a lot of people will be affected. It's not going to be the end of the market, but will be a systemic influence on the market. Whether FTX was a white knight, I asked myself the same question. When I saw the news and that they were going bankrupt, I thought, how is it possible that an exchange is going bankrupt when your role is just to exchange and buy and sell cryptocurrencies for your investors? And in fact, they were not doing what they were supposed or what they promised to do. They were using customer funds to do something that they were not supposed to do. So they were going beyond what they were meant to be.
I mean, it's just so highly disappointing is really one of the emotions that you feel, because of all things, right? You might, if you don't understand risk, that's one thing. If you over-lever, that's something else. But I mean, it's basic trading 101 to not commingle customer assets. I mean, you don't have to go to school or have, 20 years on a trading desk experience. That's the most basic rule that's out there.
Yeah, well, basically, this is a fraud. I mean, it's like if your bank is keeping the money in your bank account, but then it's doing things that they're not supposed to do with your money. If the bank loses the money and you're a simple saver or employee, of course, it's just a fraud. And I expect that there will be some sort of investigations from governments, but these would be really hard to do. I mean, I've seen graphs with hundreds of companies in many different jurisdictions, and there's been a hack of, I think, $500 million. And so this is really a bad situation to be in if you have money in FTX or investments related to that. And of course, it's not the investors' fault, because they were just trading, let's say, Bitcoins, and then the Bitcoins disappear. This is just very, very disappointing, as you said.
Perhaps there is a silver lining to this scenario where the regulators will get a wake-up call and they're going to have to react. Do you think that this will help to accelerate regulation in the crypto space?
Yeah, I really think so. I mean, and I think it's we are late to the game in the sense that this is already a huge industry, has been going on for, I think, 8 or 9 years. There is trillions of dollars involved, so definitely regulators will probably accelerate what they're going to do. The problem is that as I said before, it's a very difficult industry to regulate because you have players in basically all over the world. And in some cases, you don't even know who the players are or who owns the assets. And so unless a global initiative of at least the main regulators is in place, national regulators will really have a hard time going after these players. Because, for example, if you don't know who owns the Bitcoin, how can you decide whether the transaction is through related parties? And of course, if you're in the US and then there's a Bahamas or Cayman Island entity, and again, it's hard to track where the Bitcoin is, how can you regulate that company? And so I think it's a really hard industry to regulate unless you have a global initiative among the main regulators. But yeah, as you say, there should be an acceleration in terms of what to do because we're already late to the game. Well, dollars are involved.
Yeah. Well, I mean, do you think decentralized business models can be successful?
Well, that's a good question. So I think the first step into this industry, it will be more like a permission blockchain, which is different from the completely permissionless decentralized industry, which is, for example, Bitcoin. I think blockchains which require permission to operate, for example, an agglomeration of banks, this will be the first step. But the decentralized, completely decentralized business models will take longer to be in place. And a lot of things we need to go right. For example, the right incentives, the right regulation, the right penalties. This will take a bit more years, but permission blockchain will be the first step.
Yeah. And, you know, the crypto trading space could be on hold for a while until we see the regulation infrastructure mature a bit more, but the underlying technology itself, blockchain and you know, the associated companies, that technology appears to be here to stay.
Yeah, I definitely think so. I mean, I think blockchain is a new technology on which you can build a lot of different applications, including decentralization, decentralized business models. I think crypto trading is not going to be put on hold. We'll go through a sort of cleanup of the industry and players, and then we'll emerge on the other side in a different form. You can think of internet in the early 2000s. There were similar types of companies, investor behavior, business models. And then only the Amazons, the Google came up on the other side with more capital, better business models, more constrained investing. So I don't think it will be put on hold. We'll go through the sort of boom and bust cycles and then come on the other side with better situations overall. But blockchain will keep continuing, keep working. And overall, I think it's a technology that is here to stay.
All right, Professor, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.